Welcome to Facts Not Forecast, your daily edge in the stock market, facts, insights, and opportunities you won't hear anywhere else. Today, we're doing a deep dive into CRISPR Therapeutics. Ticker is CRSP. This is a company that's really, right at the forefront of gene editing technology. And when you hear gene editing, maybe like me, your mind jumps straight to science fiction, right?
Yeah, it does have that feel.
But it's not fiction anymore. It's happening now, evolving super fast. And our mission, our goal for this dive, is to unpack all this data and figure out something pretty critical. Can a company doing this, like truly revolutionary science, but also losing hundreds of millions right now, can it still be a compelling buy today?
That's the million-dollar question, isn't it? Or maybe $1 billion in this case.
Exactly. It feels like the ultimate biotech gamble, and we're here to pick it apart.
And I'm here to help us slice through the hype, get to the core financials, the projections. We need to look beyond the headlines, see the bigger picture. Does this amazing tech actually translate into a solid investment?
Right. Balancing that incredible potential with the sometimes harsh reality of the numbers.
Precisely.
Okay, let's start with the science then. What exactly is CRISPR Therapeutics doing? Founded 2013, based in Zug, Switzerland, about, nearly 400 employees?
Yeah, 393 last I checked. Not huge, but focused.
And they're developing gene-based medicines using this revolutionary CRISPR-Cas9 platform. Can you break that down a bit? CRISPR-Cas9 sounds complex.
It is complex, but think of it like this. It's essentially a very precise molecular tool, almost like biological scissors or maybe a super advanced find and replace function for DNA. It lets scientists make very specific targeted changes to the genome so they can potentially edit genes to fix the underlying cause of a disease.
Wow. So like correcting a typo in the body's instruction manual.
That's a great way to put it. And what's really fascinating isn't just the tech itself, but how far it's advanced. Gene editing was a dream for decades, right?
Right.
But CRISPR-Cas9 is the leap that made it practical. We're seeing it move from, pure research into actual approved treatments. And CRISPR Therapeutics has built a wide portfolio. They're tackling inherited blood disorders like sickle cell, which are called hemoglobinopathies.
Okay.
They're working on advanced CAR-T therapies for cancer, treatments that work inside the body that's in vivo, and even looking at type 1 diabetes. It's a broad application.
And the big one, the flagship product making waves, is Casgevy.
Exactly, Casgevy. That's the approved CRISPR-based therapy for sickle cell disease, SED, and beta thalassemia.
You said approved. That sounds like a really big deal, more than just one product launch.
Oh, it's huge. You're absolutely right. Casgevy's approval isn't just a company win. It's a landmark moment for the entire gene editing field. It proves, without a doubt, that this tech can get out of the lab and genuinely help patients with severe diseases that were, frankly, almost untreatable before at the root cause level. Its approval, being the first of its kind of paves the way, regulatory-wise. It validates the whole approach. Could unlock a whole new class of medicine.
So it gives investors more confidence, too, seeing that real-world validation, like the floodgates are opening.
Precisely. It signals that this isn't just theoretical potential anymore.
Okay, so the science is incredible, potentially limitless, but, as we always say, amazing science doesn't automatically equal profit, especially not right away. Let's pull back the curtain on the financials, because this is where it gets really interesting. Market cap is floating around, 5.2 to 5.45 billion US dollars as of mid-August 2025.
Yep, in that range.
Share price around $58-60. But the 52-week range tells a story. $30 up to $71. Definitely some movement there.
Volatility, yeah.
But here's the kicker, right? The company is not profitable. Negative net income. It's like about minus $468 million, trailing 12 months. Gross profit, also negative, minus $382 million.
Oof. Yeah, those are significant losses.
And they're not forecast to hit profitability in the next 3 years. Projected return on equity in 3 years is actually negative 10.4%. So what does that mean for someone looking to invest all this red ink despite the amazing tech?
It really highlights the classic biotech investment dilemma, doesn't it? Many companies like this, especially pioneers, are pure growth plays. They have to pour massive amounts of cash into R&D, into clinical trials, and just building the commercial infrastructure. Profitability comes second or third.
So the losses are sort of expected, part of the plan almost.
In many ways, yes. For truly game-changing tech, the current P&L often looks grim. You're betting on that massive growth spurt after the breakthrough product gets traction. The earnings are a lagging indicator here.
Okay, but how do they keep the lights on while burning through cash?
That's the other crucial piece. You have to look at their financial health, not just the income statement. And here, CRISPR Therapeutics looks remarkably strong. They have a very solid balance sheet, high liquidity. Their quick ratio and current ratio are both around 16.6.
16.6. That sounds high. What does that mean practically?
It means they have over 16 times more liquid assets stuff easily converted to cash
Yeah.
than they have short-term debts or liabilities. It's an enormous cushion.
Wow. Okay.
And crucially, they hold significantly more cash than total debt. This implies they have a really long cash runway,
Runway meaning?
meaning they can fund their operations, their R&D, their Casgevy commercialization efforts for quite a while without needing to immediately raise more money, which can dilute existing shareholders. It buys them time.
Got it. So burning cash, yes, but they have this big war chest to sustain them while they build the business. That's a key distinction.
Exactly.
So given that strong cash position and the revolutionary tech, I'd guess Wall Street might be looking past the current losses. What are the analysts saying?
You guessed right. The analyst sentiment definitely reflects that longer-term view, largely overlooking the near-term red ink. The consensus rating from somewhere between 27 and 31 analysts is overwhelmingly overweight or buy.
Okay. Any price targets?
Yeah, the average target price is hovering around $78 to $82. That's a decent potential upside from where it is now. But it's important to note the range of those targets. Some analysts are super bullish. One high target is way up at $268.
$268, wow.
Yeah, but the low target is down to $32. That wide spread tells you there's disagreement on the risk, maybe how quickly Casgevy will be adopted, how big the market really is.
Makes sense for something so new.
It does. But the headline is, 15 to 17 analysts say strong buy or buy, and only one single sell rating out of the whole group. That's strong conviction of the long-term story.
That's pretty clear backing. And how about valuation? Simply Wilson thinks it's undervalued.
Yeah, their model suggests it's traded about 55% below their fair value estimate, which they put around $82, right in line with the analyst average target.
Okay. Other sources see potential too.
Yes, generally pointing to upside potential around 35% or so from current levels.
Now, looking at the stock chart itself, it's been a bit of a roller coaster, hasn't it? You mentioned volatility. We've seen really strong short-term gains recently, up over 50% in the last 3 months. Similar gains year to date. It's beaten its own industry. U.S. biotechs were down 6.5% last year. CRSP was up over 20%. And it beat the broader U.S. market, too.
That outperformance is significant, yeah.
But looking further back, it's down over 3 years, down over 5 years. Although since the IPO, it's up massively, like over 300%.
That pattern is actually quite typical for this kind of stock profile, high risk, high reward, breakthrough tech. The recent gains, probably market excitement about Casgevy's approval, positive news flow.
Right.
The longer term declines before that, reflecting the tough road to market, the R&D costs, the waiting game for profitability.
And the volatility, you mentioned a beta.
Yeah, its beta is around 1.8. That basically means it's historically been about 80% more volatile than the overall market.
So bigger swings, up and down.
Exactly. Higher potential returns if you catch the upswing, but definitely higher risk. Not for the faint of heart. It demands patience and a long-term view.
Interesting contrast, then. This volatile stock with seemingly stable leadership. Management tenure is almost 6 years, board average over 6 years. CEO Sam Kulkarni's been there over 7 years.
That stability can be a positive sign in a turbulent sector like biotech. Shows commitment.
Though, his compensation is noted as above average, even with the company unprofitable. But the insider trading, that looks interesting. What does that signal?
Well, insider buying specifically can be a very strong signal. When executives and directors put their own money into the stock.
It suggests they believe in it.
Exactly. They know the company inside out. Over the last 3 months, the trend shows insiders have bought more shares than they sold.
Any specific examples?
Yeah, Douglas Traco, a director, bought shares worth over $1 million in early August 25. SR1 Capital Management, a big institutional holder, bought over $51 million worth in July. John Green, another director, bought over $300K worth back in February.
That's significant buying. What about sales? You mentioned the CEO.
Yes, there have been sales by the CEO, Sam Kulkarni. But it's important to put those in context. Executives often get stock as part of compensation.
Right, options and stuff.
And they might sell for various reasons, diversification, taxes, personal financial planning. It doesn't always mean they lack confidence. The key is the net activity.
So the overall trend is more buying.
Correct. The net picture leans towards buying, suggesting internal optimism. especially when you couple that with positive news, like good phase 1 data for another drug candidate, CTX310, that came out in June. Plus, there's positive momentum in the whole gene editing space, like Eli Lilly buying Verve Therapeutics for $1.3 billion. That tends to lift related stocks.
Right, a rising tide effect. And the news headlines seem to capture this mix too, don't they? Some caution. Upgrading CRISPR Therapeutics to hold ahead of a catalyst-rich 2H 2025, but then also optimism. CRISPR Therapeutics is in a good position to deliver on growth plans. And even after missing Q2 earnings estimates, they reported a bigger loss than expected. The talk was still about pushing Casgevy adoption and headlines like, ignore the lack of revenues, buy the future.
That really sums up the bullish case, doesn't it? Focus on the future potential.
Yeah, and Time naming them one of the most influential companies. That's quite something.
It is. Adds to the visibility.
And Jim Cramer's quote is just so blunt. CRISPR can either triple or do nothing. Captures the binary risk-reward feel.
He often cuts to the chase, yeah.
Yeah.
Really encapsulates that growth stock gamble we've been discussing. The market, analysts, insiders, they seem willing to bet on the future, overlooking the present financials.
Okay, so let's try and tie this all together. We've looked at the tech, the financials, the sentiment, the insider moves. What's the bottom line for someone considering CRSP right now? Is this a buying opportunity?
Right, let's synthesize. On the plus side, you've got a clear leader in revolutionary gene editing tech. They have an approved product, Casgevy. Huge validation. Forecasts predict extremely high revenue growth, over 60%, and earnings growth near 48% annually down the line. That's massive potential.
And the strong balance sheet, the cash cushion.
Exactly. Robust financial health despite the unprofitability. Analysts are mostly shouting buy, seeing significant upside. Insiders are net buyers, showing confidence.
And it's outperformed recently, trading below estimated fair value. Lots of positives.
A lot. But then the risks, the considerations, still unprofitable and expected to stay that way for a few years.
High volatility, that 1.8 beta, not a smooth ride.
Definitely not. And recent earnings misses show challenges remain in ramping up revenue, even with Casgevy approved. Plus, the CEO compensation point, while unprofitable, is something to note.
So, weighing all that, the final verdict, is it a buy?
Okay, weighing it all up. The projected growth is exceptional. The balance sheet provides safety. The analyst and insider signals are positive. The market seems convinced the long-term potential outweighs the current lack of profit. So, yes, based on the data, CRISPR Therapeutics does appear to present a good buying opportunity, but with important caveats. It's for investors with a long-term perspective and a higher tolerance for risk.
A high-growth, high-potential play, then. Could be transformative if it pays off.
Absolutely. For medicine and potentially for a portfolio.
Yeah.
But patience and nerve are required.
That's a great summary. And it leaves us with a thought. While headlines chase quarterly earnings, maybe the real opportunity lies in understanding these truly disruptive technologies early, even if profitability is years away. It's about seeing that longer horizon.
Precisely stated. Vision and patience.
Appreciate you tuning in. Until next time, stay sharp, stay patient, and let the market work for you.